Let's come back to the markets at home. We're going to cross to the Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, the all-share index began in positive territory, but is now trading firmly in the red, and European markets are trading in the black, so we see. The local currency firmed quite nicely on the back of the MPC decision, to keep rates unchanged yesterday, the repo rate remaining at 6.75%. But it has since, the rand has since sort of weakened slightly. We saw that it closed around 12.12 against the US dollar at the New York close, but now it's trading around 12.18. So there's a little bit of weakness there. China has come out with better than expected a growth number, pardon me. It grew by 6.9% in 2017. Even the government had expected it would grow by about 6.5%. So that's very positive. And so the question is, will that be good for commodity producing countries like South Africa? Let's take a look at the indicators. Well, I'm joined by Warwick Lucas. He's Chief Investment Officer at Galileo Capital. Thanks for joining us, sir.
My pleasure.
Good stuff. Your general market observations at the close of this week. US markets closing down last night, Asian markets doing a bit better, and obviously mixed markets right now with the South African all-share index down whilst European markets are up. What's going on?
Okay, so generally global markets seem to shrug off a US shutdown. It was pretty much steady as we go through the week. And I guess it's a kind of a picture where, well, we've seen this movie before kind of thing. Tended to look through it. You typically find that going into a potential shutdown, it's almost a kind of a squeeze rather than a slam. As things get tighter, the political odds start rising, and then parties finally start coming to the table and cutting deals. So overall, a relatively muted response to shutdown, and yeah, a positive week across the board.
All right. And now I mentioned Chinese growth beating expectations, coming out at 6.9% for the year 2017. That's a very healthy number relative to growth figures across the world. So do you think that's good news possibly for commodity producing countries like South Africa?
It's absolutely excellent news. I mean, if we go back on the Chinese economy to the beginning of 2016, we were looking at substantial fears of a hard landing. Those fears have largely evaporated. We look at that growth number in 2017, it's effectively the same as adding the entire economy of Indonesia to China's economy. So it's a very big uplift and certainly very positive for commodities.
That definitely gives some perspective, and that's huge. And then Bitcoin, in December it hit $19,000 and now it's hovering around $10,000. I mean, it's such a volatile commodity. I don't know if it is indeed a commodity. You'll correct me if I'm wrong. Would you ever touch this?
From an investment point of view, I simply cannot see any value in either Bitcoin or any other of the cryptocurrencies. Warren Buffett is on record as saying he wished he could properly short all of them. It's a massive bubble market. In terms of Bitcoin itself, it's perhaps best to relate it to the development of the browser market, where the clear winner, as we now know, is Google. Well, Google was actually the 21st search engine to come out in its time. Clearly, these things take some iterations. Bitcoin itself is very inefficient, it's slow, it's relatively expensive. New generation cryptocurrencies are much quicker. But what's happening in this market is people are mistaking virtue for value. Crypto has a huge future. It, however, does not represent any kind of value whatsoever at this stage.
Interesting. point there. And yesterday, the market seemed to like the MPC's interest rate decision, with them keeping interest rates unchanged. Repo rate at 6.75%. This morning, we did see the rand touch 12.07 against the US dollar, but it's now weakened substantially. It's now at 12.19. So what's going on? What does this mean?
I think with the current information flow, it is probably the rational decision. Inflation risks are pretty much balanced with potential setbacks to the economy. I think what we're looking for is relief on two fronts. The first is the currency strengthening, and tied into that, we're also looking to see where the commodity market will go. Now, I mean, the commodity market strengthening will provide substantial relief to South Africa in the current environment. But of course, it's early days on that. So for the time being, I think the SAB wants to watch developments. It wants to see what kind of budget actually comes out in February. Can we shore up reputation with the likes of Moody's, hopefully not downgrading us, and then take it from there. If nothing else, they retain a little bit of power in the form of a rate cut if, for example, as one would expect, that the budget is extremely, shall we say, deflationary, high-pressured, whatever you'd like to call it. I can't see this year's budget being a happy event for just about anyone.
Indeed. And yesterday, obviously, on the back of that interest rate decision, we saw the winning stocks being banks and retailers. Maybe a knee-jerk reaction, but how do you see the fundamentals of those for the rest of the year?
I think certainly we're seeing some recovery overall in interest rate sensitives. I mean, interest rate sensitive stocks are the most exposed to confidence in the economy and recovery in the economy. And I think as we've seen some recovery from its lows in the middle of last year, particularly when political confidence was really lacking, that is creating its own rebound. I think we would probably continue to see a little bit of strength there, but much slower. I mean, the banks have basically held off on lending in the past year. They really have kept the loan books reined right in. But a bit of confidence coming back, should see that starting again.
Okay, all right. Well, we've run out of time, more to ask you, but not enough time. Thank you very much, as always, Warwick, for your insights. That was Warwick Lucas, Chief Investment Officer at Galileo Capital. And after a short break, Nzinga has more business news. Do have a fab weekend.